Every year, thousands of seniors across America discover that they've paid more in taxes than they needed to, sometimes thousands of dollars extra. Decades of careful planning, saving, and disciplined spending, yet retirement brings a hidden surprise. The system quietly takes money that could have stayed in their pockets. For many, the pinch feels like inflation or lifestyle costs, but the real culprit is often hidden tax rules designed specifically for people over 60, rules that most retirees never even hear about. The surprising truth is that these traps aren't unavoidable. With the right knowledge, seniors can legally reduce taxable income, unlock deductions, and even turn what feels like mandatory spending on healthcare, charitable donations, or retirement account withdrawals into powerful tools to protect their savings. Some experts will tell you high taxes in retirement are just part of the deal, a fixed cost of aging. That's misleading. In reality, seniors who understand these strategies can reclaim thousands of dollars each year, keep more of their hard-earned money, and even create financial breathing room for travel, family, or hobbies they've put off. If this message is already resonating with you, don't just tap like, hit that hype button. YouTube added it to help messages like this reach more seniors who need guidance. You can hype up to 3 videos a week, and every single hype pushes this knowledge to someone who might be unknowingly losing money. Stick with me until the end, because the final strategy is so overlooked that even experienced financial advisors sometimes forget it. For those who apply it correctly, it can mean the difference between stretching every dollar and enjoying retirement without financial worry. In just a few minutes, you'll learn 5 little-known tax strategies that can dramatically increase your retirement savings, protect your lifestyle, and give you the confidence to finally feel in control of your finances. Meet Eldora Finch. She's 67, a retired schoolteacher who spent over 4 decades shaping young minds. Eldora thought she had done everything right, saving diligently, avoiding unnecessary luxuries, and even attending occasional retirement planning seminars. On paper, she looked like the picture of financial preparedness. But here's the twist. Despite all her careful planning, Eldora was unknowingly losing thousands of dollars every year, not due to mistakes, but because she wasn't aware of the tax strategies designed specifically for seniors like her. At first, when Eldora noticed her retirement savings weren't stretching as far as she expected, she blamed inflation. Groceries, utilities, and property taxes seemed to rise every month. Yet the deeper truth was subtler and more frustrating. The system had quietly set up rules that could either work against her, or, if understood, could work strongly in her favor. Eldora once assumed that retiring would automatically lower her taxes. She was earning less, after all, so why would she pay more? The reality was surprising. Many seniors face higher effective tax rates in retirement than during their working years. The breakthrough came when Eldora discovered overlooked deductions, smart timing of withdrawals, and charitable giving strategies. By applying these, she stopped paying more and turned the system to her advantage. In just 1 year, Eldora reclaimed over $12,000 that would have otherwise slipped through her fingers. That money wasn't theoretical, it was real cash she used to take her grandchildren on their first family cruise, something she had dreamed of for years. What started as quiet frustration transformed into empowerment, confidence, and a renewed sense of financial control. But Eldora's journey isn't just about money. It's about security, confidence, and the joy of realizing retirement can still bring positive surprises. The best part? Everything she learned is accessible, legal, and designed for seniors ready to protect every hard-earned dollar. Stick with this video, because as we explore each of the 5 tax secrets, you'll see exactly how Eldora's approach turned a just getting by retirement into one of freedom, comfort, and peace of mind. Secret number 1. The power of the standard deduction. Many retirees are unaware that the government provides a significant tax advantage specifically for seniors, but it's not widely advertised. Every individual over 65 in the United States qualifies for an increased standard deduction, yet countless retirees overlook it. The result? Money that could remain in their pockets is left on the table year after year simply because they weren't informed. Here's a surprising reality. Some seniors spend hours meticulously saving receipts, tracking medical bills, mortgage interest, and even small charitable contributions, believing they are maximizing their deductions. In many cases, this effort is unnecessary, and in some instances, it can actually be counterproductive. For most seniors over 65, the enhanced standard deduction exceeds what they could claim through itemizing, automatically reducing taxable income without the complexity of record keeping. Eldora Finch experienced this firsthand. 4 years, she carefully documented every expense, thinking she was outsmarting the IRS. During a review with her tax advisor, she discovered that as a 67-year-old, her standard deduction had increased beyond the total of her itemized deductions. By choosing the larger standard deduction, her taxable income dropped significantly, and the refund she received the following year was so substantial that she referred to it as her bonus paycheck. This adjustment transformed Eldora's approach to taxes. What had once been a source of stress and hours of paperwork became a straightforward way to save consistently each year. The enhanced standard deduction continues to provide annual savings for seniors over 65, creating long-term financial benefits with minimal effort. Have you ever discovered a tax break you weren't aware of? Share your experience in the comments. These moments of clarity can be life-changing. While the standard deduction is a strong starting point, it is only the beginning. The next strategy goes beyond saving time or simplifying paperwork. It is a proactive approach that can protect you from paying tens of thousands of dollars more over the course of retirement. Stay with us, because this next secret is one every retiree needs to know. Secret number 2, tax-friendly retirement accounts. Many retirees unknowingly position themselves to pay more in taxes during retirement than they did while working. It may seem counterintuitive, earning less should mean paying less, but there's a hidden challenge. Every dollar withdrawn from a traditional IRA or 401k is treated as ordinary income, added on top of Social Security and any other sources of income. What feels like a secure nest egg can quickly turn into a tax liability if not managed strategically. Often, retirees are advised to let their money sit and grow. While this approach is safe in one sense, it can unintentionally push individuals into higher tax brackets over time. The IRS doesn't issue warnings. Taxes arrive in full force when you file your return. Eldora Finch experienced this firsthand. She had faithfully contributed to her retirement plan for decades, assuming withdrawals would be straightforward. During one particularly complex tax season, she learned about Roth conversions. By transferring a portion of her traditional IRA into a Roth account, Eldora chose to pay taxes on that money immediately, while still in a lower tax bracket, instead of later when required minimum distributions, RMDs, might have resulted in significantly higher taxes. At first, the idea seemed counterintuitive. Why pay taxes earlier than necessary? Yet the strategy proved highly effective. Paying a smaller tax upfront allowed Eldora to avoid much larger tax liabilities in the future. She began with a small conversion, observed the impact on her return, and gradually expanded the approach. Over time, she built a Roth account that provides tax-free income for the remainder of her retirement, eliminating surprise bills and reducing stress about future tax brackets. The benefits went beyond finances. Eldora no longer worried about how much the IRS would claim from her savings. She could confidently plan vacations, gifts for her grandchildren, and even healthcare expenses without anxiety, knowing her strategy protected both her wealth and peace of mind. Consider this. Would you rather pay smaller taxes now or risk significantly higher taxes later? Share your thoughts in the comments. Let's see how many are planning ahead. Roth conversions are just one piece of the puzzle. In the next section, we'll reveal a strategy that can generate tax-free income from something you already rely on every month. This is a crucial tactic every senior needs to know, and you won't want to miss it. Secret number 3, the Social Security tax trap. Many retirees are surprised to learn that up to 85% of Social Security benefits can be taxable, depending on other income sources. Despite decades of paying into the system, a significant portion of monthly benefits can quietly disappear to taxes if planning isn't done carefully. This is a reality that often catches seniors off guard, as it is rarely discussed in retirement planning conversations. Here's how it works. Social Security isn't taxed at a flat rate. The IRS calculates your combined income, which includes your adjusted gross income, tax-exempt interest, and half of your Social Security benefits. If this total exceeds certain thresholds, a portion of your benefits becomes taxable. Retirees who mismanage IRA withdrawals or other income sources can inadvertently push themselves into a higher bracket, increasing the tax on Social Security that could have been avoided. Eldora Finch encountered this scenario firsthand. For years, she assumed her Social Security income was safe from taxation, believing it to be a guaranteed monthly safety net. During a thorough review of her finances, she realized that her IRA withdrawals, combined with other income, were pushing her into a bracket where 85% of her Social Security benefits became taxable. The result was a significant financial hit, affecting funds she had planned for daily expenses and small luxuries. The solution Eldora discovered was strategic planning. By adjusting the timing and amounts of her IRA withdrawals, she kept her combined income below the critical thresholds, drastically reducing the tax applied to her Social Security. Instead of large lump sum distributions, she spaced withdrawals throughout the year, maintaining control over taxable income. The outcome was substantial. More money remained in her pocket, cash flow became predictable, and the stress of unexpected tax bills diminished. This strategy demonstrates that a few well-planned moves can save hundreds, or even thousands, of dollars annually. It's not a rare loophole. Any senior who understands how to time withdrawals can apply this principle and benefit significantly. Have you ever realized that Social Security could be taxed this way? Comment yes or no. I'm curious how many seniors were already aware of this hidden trap. And don't go anywhere. The next secret is equally powerful. It involves a cost most seniors face every year: medical expenses. With the right approach, these expenses can transform from a financial burden into a significant tax-saving opportunity. Secret number 4: medical expense deductions. Many retirees are surprised to learn that they may be leaving hundreds or even thousands of dollars on the table each year simply by not tracking medical expenses carefully. Costs such as prescriptions, dental work, vision care, and specialized treatments often qualify for tax deductions, yet most seniors overlook them. There's a common misconception that medical deductions are only for the extraordinarily wealthy or those facing extreme health challenges, but in reality, anyone with significant medical expenses can qualify, and far too few take advantage. Eldora Finch discovered this the hard way. One year, she faced unexpected costs: vision surgery, extensive dental work, and a routine procedure that ran into complications. The total expenses felt overwhelming, and she initially feared her retirement savings would be depleted. She worried she might have to delay or cancel plans she had looked forward to, creating both financial and emotional stress. But what initially seemed like a burden became an opportunity. Eldora learned that seniors can deduct unreimbursed medical expenses that exceed a certain percentage of their adjusted gross income. By carefully documenting each expense and submitting the deductions, she transformed a year that could have been financially stressful into one of tangible tax savings. The result was a significant reduction in her taxable income, offsetting many other costs and freeing up money she had assumed was lost forever. Beyond the financial benefit, this approach brought emotional relief. Eldora no longer had to panic over medical bills or feel forced to compromise her lifestyle. She was able to enjoy her retirement fully, traveling, spending quality time with family, and indulging in small pleasures she had previously deferred. What began as a year of stress turned into a year of empowerment and confidence in managing her finances. Most seniors aren't even aware they are eligible for these deductions, and many accountants fail to highlight how much can be claimed. For anyone over 65, carefully tracking medical and dental expenses can be one of the simplest and most effective ways to reclaim money that would otherwise be lost. And here's a teaser for what's next. While medical expense deductions are highly impactful, secret number 5 is in a league of its own. It's the real game changer, the strategy that even many accountants overlook. Stick around, because this final secret has the potential to revolutionize your retirement income and protect your savings in ways you may have never imagined. Secret number 5: Qualified Charitable Distributions. Even after decades of careful planning, many retirees never discover a strategy that allows them to give generously while reducing taxable income at the same time. It may sound almost too good to be true, but it exists, and it's called a Qualified Charitable Distribution, or QCD. For anyone over 70 and a half with a traditional IRA, this strategy allows you to donate directly to a charity from your retirement account while completely bypassing taxable income. That means your contribution doesn't just benefit the charity, it benefits you as well, by keeping more of your money out of the IRS's hands. Eldora Finch discovered QCDs later in her retirement planning journey, and it completely changed the way she approached giving. She had always wanted to support her church and local nonprofits, but worried about the tax impact. Previously, she had written checks from her personal savings, reducing funds available for essential expenses. Once she learned about QCDs, everything shifted. By donating directly from her IRA, Eldora could meet her charitable goals and reduce her taxable income simultaneously. For the first time, she felt confident that her plan served both her financial security and her desire to make a meaningful impact. Many financial advisors overlook QCDs entirely or underestimate their potential. Some assume the process is too complicated for ordinary retirees, but that's not true. The process is straightforward. Instruct your IRA custodian to send the donation directly to the charity. The donated amount counts toward your required minimum distribution without ever touching taxable income. This is not a loophole. It is a legitimate, IRS-approved method to retain more of your retirement funds while contributing to causes you care about. The emotional impact of this strategy is profound. For Eldora, it wasn't just about saving money, it was about leaving a legacy. She experienced the joy of knowing her retirement funds could make a lasting difference, all while reducing a financial burden that had long weighed on her mind. The peace of mind and fulfillment from giving were priceless. If you are over 70 and a half, a QCD could be one of the most powerful moves you make in retirement. It is often overlooked, yet entirely within reach. Imagine turning mandatory distributions into a tool for generosity, while keeping more of your hard-earned money. By applying this strategy, you can transform retirement from a period of tax-related anxiety into a time of empowerment, legacy, and financial freedom. By the time Eldora Finch reached the end of this journey, the transformation was profound. Just a few years earlier, she had spent countless evenings worrying about taxes, unsure if her retirement savings would cover bills, healthcare costs, and even small indulgences. She felt trapped in a cycle of stress, carefully calculating withdrawals, double-checking receipts, and questioning whether her carefully planned retirement was truly secure. No matter how disciplined she was, hidden tax pitfalls seemed to lurk around every corner, quietly eroding her confidence. Then she discovered the 5 powerful strategies we've covered today. Each secret unlocked a part of her financial freedom. The enhanced standard deduction immediately reduced her taxable income, providing relief she hadn't felt in years. Her Roth conversion strategy allowed her to pay manageable taxes now instead of facing large bills later. By navigating the Social Security tax trap, she stopped losing a significant portion of her benefits to avoidable taxation. Carefully tracking medical and dental expenses turned necessary costs into tangible deductions. And finally, leveraging qualified charitable distributions enabled Eldora to support the causes she cared about while lowering her taxable income, without touching her day-to-day finances. The results were remarkable. In her first year alone, Eldora reclaimed an extra $12,000, funds she now uses for family trips, hobbies, and the peace of mind that comes with financial security. She went from stressed and cautious to empowered and confident, fully enjoying her retirement while knowing she had turned the system to her advantage. And the best part? None of this required luck, insider knowledge, or risky financial maneuvers. These strategies are fully accessible to any senior willing to plan thoughtfully and take action. These 5 steps, maximizing the standard deduction, smart retirement account planning including Roth conversions, careful Social Security withdrawal management, leveraging medical expense deductions, and using QCDs to reduce taxable income while giving back, tackle specific tax challenges retirees face. Together, they form a comprehensive roadmap to supercharge your savings and protect your financial future. Most retirees never discover these strategies, even after decades of paying into the system. The good news is, you don't have to be one of them. By understanding and implementing these techniques, you can reclaim money that would otherwise be lost, reduce anxiety about taxes, and enjoy the retirement lifestyle you've worked so hard to achieve. Eldora's story proves it's possible. Retirement doesn't have to be a time of worry. With the right approach, it can be a period of freedom, joy, and confidence, knowing you're finally in control of your money. Retirement should be the most liberating phase of your life, yet far too many seniors wake up stressed about taxes, hidden fees, and unexpected deductions. Here's a startling fact: even retirees who believe they've planned perfectly can be losing thousands of dollars each year without realizing it. It's not due to mismanagement, it's because the system quietly operates in ways that most people only notice too late. The good news? That doesn't have to be your story. With the right knowledge and strategies, you can turn hidden pitfalls into opportunities, reclaim money you thought was gone, and enjoy the peace of mind you've earned. Consider Eldora Finch. A few years ago, she was anxious, second-guessing every financial decision. Today, after applying the 5 tax strategies we've discussed, the enhanced standard deduction, strategic Roth conversions, careful Social Security planning, medical expense deductions, and qualified charitable distributions, she's not just financially secure, she's empowered. Eldora is traveling, spending quality time with family, and giving back to causes close to her heart, all while keeping more of her hard-earned money out of the IRS's hands. Her journey isn't unique, it's a roadmap any senior can follow. Here's something most people overlook. The difference between a stressful retirement and a worry-free one often comes down to a few strategic moves that remain invisible to the untrained eye. Taxes don't have to be an unavoidable burden. With informed planning and timely action, thousands of dollars can be reclaimed each year. These strategies don't require risky investments or complex maneuvers. They're about knowledge, timing, and making smart choices. So here's my challenge: don't let another year pass leaving money on the table. If this video has been helpful, smash that like button, hit subscribe, and don't just like, use the hype button. Every hype pushes this information to seniors who deserve the freedom to enjoy retirement without fear of hidden taxes. You can hype up to 3 videos a week, and each one increases the chances that someone like you will discover strategies they never knew existed. And don't stop there. Share this video with someone who is retiring soon or quietly struggling with taxes. This isn't just about numbers, it's about transforming lives, giving seniors confidence, control, and the ability to enjoy the retirement they've earned. Knowledge is power, and in retirement, that power translates directly into freedom. Take action today, because the sooner you apply these strategies, the sooner you'll stop letting your money slip away and start experiencing the peace, security, and joy that comes from mastering your retirement finances.